Yo, what's up, everyone? I have the craziest stock portfolio update ever for you guys. We are at a new all-time high today. A lot of stocks that we know and love are literally at all-time highs today. Like Google's at an all-time high. All of our portfolios are nearly at an all-time high. So this should be a really fun update. AMD's nearly at an all-time high. We're almost up 100% on them. And then in our Moomoo portfolio, I kid you not, we're up 8% on the day. So in this video, I'm literally going to share with you all my portfolios, my total percent change on every single stock, how much I'm up and down on every stock, what are my most recent purchases, what are my best performers, what's my dividend income. I know a lot of people like to see the dividend income, so I'll be sharing the dividend income as well. I'll share with you, literally all my year-to-date returns, my lifetime, like our open profit and loss. In this portfolio, we're up 24% all time. But year-to-date, we're up 35%, mainly from like AM. We were down bad. Like we've definitely underperformed the market in the long run. But this portfolio, for example, we're up like 80% year to date. I kid you not. And then here's our Robinhood portfolio. So I'm just going to start here. I'm probably all over the place. I apologize. I'm just so excited because one of our portfolios is up like 10% on the day. So let's start here with our Robinhood portfolio. And I actually have a different goal with each portfolio. Check this one out at the top. As you can see, it's called my dividend only. If you look at the top of this one, it's called my buy and never sell portfolio. I'll be telling you my philosophies around each portfolio, my strategy. And this one's kind of just my risk on portfolio where I buy a lot of growthy names. I don't have any rules here. I sometimes swing trade, and some stocks I just legit never sell in there. So it's kind of just whatever I want to do. So anyway, let's start over here with our Robinhood portfolio known as our dividend only account. And I got a Roth IRA I'll give you an update about, share with you the income. So check this out. Here's our Robinhood portfolio. Year to date, we're up 18%. In the past year, we're up 15. Actually, let's compare that to the S&P. So we're up 18% year to date. Here's the S&P 500. The past year to date, they're up 15. In the past year, they're up 16. So the S&P's actually done slightly better than me on the 1 year. And here is every stock that I own in here by total equity. My largest holdings are at the top. Constellation Energy, they're up crazy on the day. Google's at a near all-time high today. And here's my total percent change on every stock in here. Luckily, we are up on every holding in here. And this actually does not include the dividend. Like Carlisle has paid me a couple percent in dividends. It's not included in this. And I got some. No, notice I call this my dividend only portfolio, but as you can probably tell, most of these are like dividend growth names like Meta, Google, United Rentals, Constellation Energy. They all have dividend yields of under 1%, but they still pay a dividend nonetheless. And I think for me, at a very young age, and I have so much time on my side, I shouldn't be going into the super high dividend yielding ones. I want to go with the lower yielding ones, but in 5 to 10 years from now, when I need the income, it'll be way higher. It'll be my yield on cost will be just like those higher yielding names. I'll have like a 3 to maybe 5% yield on cost on some of these names. So yeah, that's every stock that I own in here. And here's my Roth IRA as well. We started this nearly exactly a year ago. I'm a little scared to show you all the holdings in here because it's so subject to change. I know there's way too many holdings in here and it's all over the place, but trust me, I plan to make some major changes, sell off a few of these names, because my biggest critique in my portfolio I know is I have too many holdings for sure. But yeah, I got Iron Mountain. That's my favorite REIT. Out of all the REITs out there that exist, I've looked at all of them, all the sectors. This is my favorite REIT of all time. Now you get a 3% yield. They have a rule where they only keep their dividend payout ratio in the mid 60s. AbbVie, dude, this is a stock that no matter what, no matter the environment, I think will just always give you 6 to 8% yearly returns, even if tech does bad. Just like McDonald's, dude. AbbVie, McDonald's. I'm almost contemplating moving AbbVie into this dividend only portfolio just because of how much conviction I have in AbbVie. It's crazy good. And then I have some more speculative AI names, like I have Wix. This is your only vibe coding publicly traded name. I won't get into all these names here, but yeah, Calmain, Perimeter Solutions, the #1 fire retardant play out there. So yeah, that's our Robinhood portfolio. And let me also share with you the dividend income. So if we go over here to dividends, check this out. So we have made some changes. We used to own Main Street Capital. I did sell out of that just because I still love the company. It's my favorite BDC. Out of all the BDCs, Main Street Capital is my favorite. But I think in a lower interest rate environment, and rates are going to be like lower by 75 basis points in less than like 6 months, Anyway, here are all the dividends we've received. Again, these are small, like Google, 4, Constellation Energy, 6, $14, United Rentals, 9, Main Street Capital again, Google. So yeah, these are all the dividends we use. Here's the crazy part. If you guys want to see the truth, we used to own, look how long ago, we used to own the covered call names. I used to be an only covered call ETFs. I don't even remember some of these ticker symbols anymore. I converted my portfolio. Look at this. I used to own some other super high yielding BDCs, Arway, other REITs like NSA, TLTW, but we've converted to like the lower yielding names that I think will have more growth. So yeah, that's our Robinhood portfolio. Let me go now to everyone's favorite, my Webull account, because this is known as my risk on account. Yo, look at AMD for the first time ever. AMD, that's a new all-time high. We're up 100% on them. We didn't even time the bottom on them. They're my favorite chip play just because I think they're an easier double than NVIDIA. If you look at the market cap, they're worth 400 billion. That's still it's easy to double, but if we go to like Nvidia, they're worth 4.5 trillion. For you to double your money, they have to be worth $9 trillion. I think it's an easier double at AMD, and so far, for the first time ever, I just doubled my money. So they're also just as growthy. So I like them. Then I got some other names in here. A lot of risky names. A lot of these names in here, I would not touch at all at their current valuations, like AMD, Robinhood, SoFi. These all trade at like 50 plus next year's net income. Like they're all really expensive. Dave's really cool. We got Axon as a drone defense play, body cam play, government play. So yeah, actually, let me sort by our total profit and loss. So yeah, here's the stocks that have returned me the most. Again, yeah, what was our year-to-date performance? Year-to-date, yeah, we're up 35%. Oh yeah, year-to-date dividends. Let's check that out for the dividend investors in here. So yeah, Progressive, T Rowe, Molson, Clear Secure, T-Mobile. We sold out of T-Mobile, sadly. Actually, T-Mobile just tanked like 6%. So I guess I might actually look back into buying more T-Mobile. But yeah, here are all our year-to-date dividends, $128 year-to-date, which is pretty cool. But yeah, let's keep back with this update here. A lot of risky names. Like I wouldn't touch Super Micro's a bit expensive here. Disney's interesting. I don't expect them to outperform the market in the long run. I might give them the boot eventually if I see a big opportunity elsewhere. Toast is being toasted just because all the restaurants are. You look at Wendy's stock, Jack in the Box, Chipotle, they're all struggling. Cava. So Toast, the restaurant point of sales payment provider, they're also struggling hard. And then here are some of our big losers. UiPath, we're down 26% on them. UiPath has seen a little bit of momentum, but they really have no moat. I'm actually trying to get out of that name actively. Zoom, we're down 45. The reason I haven't sold out of Path and Zoom, they're just too cheap to sell. I mean, they have so much net cash, they're earning interest, they're doing buybacks. It's just some stocks, it's certainly worth it to take the loss on. But for now, I'm just going to hold on to these names and just hold on to the losses, whatever. I also bought a little bit more of Progressive Corp on the dip after their earnings. Calmain, so we have 8 shares of Calmain in here. If you noticed back in my Roth IRA, quick tangent, we also bought 5 shares. Yeah, is that our total percent change? We also bought 5 shares of Calmain. I have so much cool stuff to say about this company. Like 30% of their market cap is just their net cash on hand, no debt. 7% dividend yield, trading at 4 times net income. That's actually the largest. They sell a commodity, but largest chicken egg provider, largest chicken egg market share in the U.S. So yeah, that is our Webull portfolio. Again, I wish I could go. I have so much to say about every single stock. It's crazy. One day I'll maybe do that. Maybe I'll do a live stream or something and upload it as a video where I just tell you my favorite thing about every stock. But check this out. Here is the main winner, our Moomoo portfolio. Check this out. I'll go ahead and share with you on a return money weighted average. We're up 80% year to date, and the S&P is only up 15. And we were doing just as bad during the April dip. We were down 16. The S&P was down 13. But what happened was we bought the dip during April. What we loaded the boat on was Comfort Systems. We literally bought this stock this year. We bought it in January. We bought a little bit more. We dollar cost average, we didn't just spend all our money at once. We dollar cost average, and then they just have absolute blowout earnings. So yeah, this stock is up 18% on the day, well to a new all-time high. I don't expect much more gains off this company, but if you're wondering, hey, are you going to take any profits? Are you going to trim your position? The answer is no, not at all, because if you look in the top left, this is called our buy and never sell portfolio. The reason we're up 80% year to date is because I didn't take profits before today, like Powell Industries as well. We're up 4x. Is that? I think they're at an all-time high today. No way. So, but yeah, we haven't sold a single share. We haven't taken a single dime of profit on Powell Industries. Most people, when they get a double return, they sell out of it. And that's actually one of my biggest regrets ever. If we look at Robinhood right here, we have 5 shares. I sold. I used to have a lot more. Look at that. We were buying it at 8, 10, but we sold most of our position it made sense. I sold my position for a 2 to 3x gain. I was buying it single digit. My average price is 13. We sold it at 36. So we made like double or triple our money. It made sense because we were down so long on this stock. But that was my biggest regret. I sold 50 shares at $36. What is it today? $136 or $142. Like I don't want to think about that, but at least I didn't fully sell out. But yeah, I think a lot of people they shouldn't trim their stocks as much as they want to. So anyway, yeah, there's Comfort Systems. They're up crazy. Powell Industries is up. Another huge stock that has led to a bunch of year-to-date gains has been Amphenol Group. They're known as like the nervous system of the AI ecosystem. Check this out. Just like Comfort Systems, we bought this one during the April dip, and they've just been a monster performer. Every time there's a huge dip like this, they didn't notice they didn't fall as much as like the overall market did. It felt tough because I'm like, I'm not really buying this stock on a dip, but man, it's always worth buying quality. We also got Coca-Cola Consolidated in here. This is the Coca-Cola bottling company. They've bought back so much of their own shares. Here's you can at a quick glance tell if they're doing share buybacks. You look at the net income, it's up by 8%, but the net income per share is up by 16%. Remember, the EPS growth and the net income growth should always be the exact same. The only thing that changes this is the share part of the ratio, if they either diluted you or if they issued shares. Or no, diluted you or bought back shares. So anyway, yeah, Coca-Cola is a cool dividend growth name doing buybacks. Amazon, dude, this is like an ETF in one. Robotics play, e-commerce play, subscription play, grocery store, logistics, real estate play, AI play, like drone play, cloud play. Their AWS business is huge. They just had some AWS outage, but I think it was like good publicity. Or people realized how many companies actually rely on AWS. The AWS business is actually the most valuable part of Amazon. It's worth they're doing over 100 billion of annual revenue, and that's just for the full year 2024. It's already up, another 15%, so it's going to be like 120 billion. So anyway, I just bought another share of Amazon, another just never sell stock. So Amazon, and one of our newest positions as well in here is Ferrari stock. This one's interesting. It's my only European company, so why not get some international diversification? Why do I only own U.S. names? So for the first time ever, I bought one share of Ferrari. Again, I didn't just buy the stock because they're on a big dip right now. I bought them because I like their numbers. I like their financials. I like the buybacks, dividend growth, net income growth. The backlog, like everything about Ferrari, I like, except the valuation is still a little too high. So I didn't notice I didn't load the boat. In this environment right now with valuations high, S&P at all-time highs, you got to be cautious. Don't spend all your money. And then MUSA, this is our new oil and gas play. It's my favorite way to get exposure to oil and gas. I think what I've noticed is as oil goes up, this goes up more than oil, and when oil goes down, it goes down less. That's because of their capital allocation strategy. Most oil stocks kind of suffocate themselves at high dividend. But notice this one only has a 7% payout ratio and a 0.5% yield. So that leaves them so much extra money to do share buybacks, and that's what they're doing. I kid you not. This company has bought back 36% of all the shares just since 2019. So if you want exposure to oil like me, but you don't necessarily want to buy one, like look at the difference between Murphy and Exxon Mobil. Notice like they still rhyme together, like they still follow whatever oil prices do. Like Murphy USA is still exposed to the like if oil prices go down, their numbers go down. And look at this, their revenue is still down 8.2%. But I think the reason they're doing so much better again is because of the share buybacks. They bought back 36% of all the shares since 2019. They have a safe dividend payout ratio. They're opening up like 50 new stores. Like I just love everything about that company. And there are only 3 shares for me. But yeah, guys, that was the entire portfolio update. Here's our all-time performance in here if anyone's curious. Oh, and I can show you the actual the dividends in here. So if I go to fund details right here, we go to corporate action, dividends. Here are all the dividends that I've received. $4 Amphenol, Powell Industries 3, Comfort Systems 6, Coca-Cola 5. Again, Amphenol, Powell Industries. It's kind of like a cycle. So anyway, we don't get much dividends, but I think the dividend growth in the future is going to be crazy. So yeah, let me know how your portfolio is doing. Hopefully it's doing just as good as mine. By the way, hit the subscribe button if you want. Please, please, please hit the like button too. And we live stream every day. So if you want to hit the notification bell, that'd be awesome. But I'll see you guys in the next one. Hope you have a fantastic rest of your weekend. See you later.